is the morning report, and so as we look at the ES on a 30-minute chart, I want you to take a look at something. Yesterday I said, hey listen, down trending formations on the slower SMIs and the stochastic RSI, and hang on 2 seconds, I shifted these levels just a little bit from a sensitivity perspective. And what I said was it should resolve to the downside. Well, the first thing that started happening in the morning is the bounce up. But what I want you to keep your eye on is the big picture. And the big picture is, what is the chart supposed to do if momentum indicators are beneath the 50% line or beneath the 0 line, as it is here in the MACD? And the answer for these slower technical indicators, the answer is always a resolution in the direction of prevailing momentum. And if we are sitting underneath moving averages or we reject the 50, we must anticipate a measure of collapse. We must. If we fail to do that and we let ourselves get sidetracked by what we perceive to be, hey, I didn't think this was going to go to 2075. I thought this would top out at 2072. It went to 2075, began to reject. It gave me a lower high. By then, I couldn't even see by 1:30 because of this sinus infection, just excruciating pain. But in any case, it comes through with the second lower high here from this punch up, again rejecting those moving averages. Keep your eyes on those 30-minute charts. Keep your eyes on there. Notice where you are in retrospect to your moving averages, and if you are under that 50 and under that 10 and you begin to collapse, you must know that this downside momentum that seems quite apparent right here is going to continue. And that's what we did. That's what happened yesterday. Today, let's take a look at this. We came down into trendline support late last night, began to bounce. We've been bouncing since 8:30, 9 o'clock last night, and so we are moving into resistance. I appreciate that. I do not feel much better. I actually feel much worse. But moving on. So what happened here now is that we're coming into the 50, and this 50 is very, very important for us to look at in this grand scheme of things. What's actually happening in the chart in the 30-minute region? We're jammed between these moving averages. We're sitting above the 20 but under the 10, right? And so this 10-20 crossover has the positive drift. The problem is the positive drift is into resistance. So what do? Are we here to make a lower high? Or are we here to breach this area and come back into this space? Let's take a look at relative momentum, and let's move up a little bit on the hourly charts to see if the momentum has actually shifted. And indeed, it has not. We still have a great deal of negative momentum right here. And so, although we are drifting upwards, we must think about this, right? We're drifting upwards. That means we've got some press, but the press is into resistance because of our location. If the press were not into resistance and we would be breaking out, our slopes would all be moving in that general direction, and we would likely break this area. My thought is we are not going to breach this region with these kinds of formations, and if we do breach it, we will retest it before continuing forward. That is the best thing for us at this particular juncture. In terms of the chart, we are a little bit sideways, moving up into resistance. 15-minute charts, you know, I've liked stepping back from them a little bit. Those 5 minutes really throw us off. The 5 minutes would be great if all we did was stare at the slow technical momentum indicators, but often the candlesticks really get us. So what are we looking at? Again, holding the 50. The 50 is flat. When a 50 is flat and moving averages are flat, it means that we normally spend time above and below in equal amounts. Now we've spent quite a bit of time underneath, and now up here we are holding the level. To me, it seems like the breach of the 2057.75 area is going to give us a little bit of a long action into 2059.75. Got about 8 ticks there. Fast SMI inflecting, fast MACD inflecting. Troublesome signs because everybody's sitting at the midline. Sorry, at the midline of these momentum indicators, these MACDs particularly, and that really is telling us we've got choppy price action. You know, we had a lot of data come out today. We had the EIA report coming in at 10:30 and all kinds of things going on. And so this first day of the month is likely to be a little whippy, but right now it just says, listen, I'm trying to hold my levels. I've got inflection. I have slope in some of these spaces, so I anticipate a move into resistance, but at that point, that resistance level should break down and, excuse me, it should hold tight, and the chart should break down back into support and hold the ordinary levels. What I did notice, the TF formation was not quite like the ES or the NQs yesterday afternoon near the close. It really did not roll over quite the way those guys did, but it did roll over in the aftermath and held on to the trend line events here. A little bit of a weak trend line, so you can't expect that it's going to bounce directly off of it, but 4-hour squeeze on the moving averages. High, lower high, lower high, low, lower low. That's all fine and dandy, except these slopes are a little bit upward. The 20 a little bit upward, 10 downward, 50 flat. So we know we've got noisy action here. Take a look at this. Every bounce is going to get sold. Every pullback is going to get bought. That's just what it looks like. Prevailing momentum still negative because we are sitting underneath those areas on the longer time frames. Shorter time frames showing us this bounce pattern that we should be having up into the region. And so let's take a look at this again. Where are we in retrospect to the moving averages? We've got an S-curve test that held, another test that's coming in also holding. We have the 50, the 10, the 20 all together. They're in a squeeze. We can see buyers defending this region. If we lose 1243, we've got ourselves a short. A short that's likely to be bought up as it comes into support. So you want to be cautious here. The breakout above 1246, or if you feel really adventurous, you can take it off of this pivot action right here at 1244. What do we have? Fast indicators are down. And so if the fast indicators are down, we know that we're measuring candlestick movement. And so this is still pointing downward. However, we've got an upward slope in positive momentum for all of these, and so it's telling us that pullbacks here are still likely to be bought. The fast lines measuring the pullback, the slow line telling us the resolution of the pullbacks. Okay? And if we're here and it's flat to slightly neutral, we know that resolution is going to be some sort of choppy zone. If we want to take a look at a tighter moving average, a tighter time frame, we can take a look at this 15-minute. This one's really fairly messy as well. And so we are holding the prior day's low in this case. Buyers trying to step up. We've got a flat 50 here as well. Look at this though. Negative sloping action here, positive sloping action there. Negative sloping action here and here. Flat, potentially inflecting sloping average here. That's very noisy price behavior. That means support to resistance, resistance to support. And so you want to wait until it gets out of this space. Wait until they stop doing this and they start doing this. And when they start doing this, where that has slope and that has slope, look at how it behaves according to these moving averages, folks. We got to make trading simple and straightforward, and sometimes if the candlesticks and the moving averages don't give us those simple, straightforward spaces, we just must agree not to trade, right? We just must agree not to trade, but what we have to do is keep on the alert to watch the moving averages squeeze together and make a decision. Let's take a look at oil. You know, oil is trying to base, right? It's at this very familiar pattern at 47.77. Looks a little bit sideways, but again, holding fairly well. Here we can tell that buyers are trying to step into this space and hold the chart, but we are caught between moving averages and they're mixed. We have a 50 that's up, but we're underneath it, coming to retest the region. And so, you know, if we're under the moving averages and we have negative momentum, we should reject the region. That's just what we should have, unless we are in a reversal pattern. And if we're in a reversal pattern, we're going to punch up, going to retest the region. It's going to give us a higher low, and then we're going to be able to move out. So how do you trade something like that? The best thing to do is to think about this. When you know that you could be in a reversal pattern and you are looking at your momentum and you're saying, you know what, I'm going to take it short up here. If it comes in and it begins to mess around and hold a higher low, do not wait and see. Get out of Dodge if formations begin to lift, particularly if they begin to lift. You want to be super cautious about hanging on to trades. Don't get into the habit of going, okay, I'm going to give it just one more candlestick if momentum is moving against you. All right, hourly charts, what are we doing? Here we came into the 10, then we breached the 20. We know the 50 is resistance. We've been selling off of it, but momentum is still upside. We've got all of our formations pointing to the upside here. So what do we do? What do we do right here? This makes for a very interesting chart formation. Notice we moved up here. We held this level. We held this level. Look what's happening to momentum. As we do that, it is accelerating. Here's the thing. What's it accelerating into? It's accelerating into the Globex or into resistance level 1. Is this a valid trade long here? You betcha. It sure is a valid trade long. Does it mean you have a little bit of a wider stop? It does. But look at what you're doing. You've broken out of a failing wedge. You've come down, you're holding your 50, you've moved sideways, your momentum has continued to crest. It is very high, so it's telling you there's resistance ahead, but you could easily get yourself staged for the proper trade here by either taking it long in small size and leaving a wide stop, or being patient and saying, you know what, this is very high, I like the slope, but I want it to come back into support and give me my appropriate levels before I move forward. That is completely valid. Remember, the chart could be very messy here simply because of the EIA report, and you want to be super careful about trading into the report. Alright, 15-minute chart, what's it showing? We've got resistance at the 47.78 area. We're rejecting it pretty handily, so what could we do? What might be the fair trade? Obviously we can see inflection here, right? If we see the inflection event here and we say, alright, I see that inflection, next time it pops up I'm going short, that's also extremely valid. Notice, the inflection event begins here, and so right after that space, if it pops into this region and you see it bringing in the lower high, you can short from that perspective, but realize you're moving against the grain of the longer time frames. And so when you are doing that, you've got to realize that your trade has a short shelf life. If you trade in the direction of momentum of the slow SMI and the slow stochastic RSI and the slow MACD, if you're trading in those directions, your trade shelf life will be longer. So keep that in mind when you are setting things up. I know there's a lot to think about, but you definitely want to pace yourself through what it is that's going on, because it is very important to realize. Let's take a look at the NQs. And listen, folks, we get into a space where we end up losing money because we rush to a trade, right? If we see resistance ahead, if we see our momentum indicators spiked really high where we should have a reversal event, or at least a pullback into support, learn to develop patience that tells you to wait through these cycles, okay? Let's take a look at the NQs. What we see here, this is a little bit of a double bottom event, right? Doesn't look like the other charts. There's no sloping action here. The NQ, to me, presented a remarkably weak space. And so, as we look at this, we see it rejecting the 10, rejecting the 50, under the 20 that is upside, and then under the 50 that is downside. What should we be doing? Look at the fast technical indicators. They show slope. It means we're moving into resistance. Why do I anticipate as resistance? Because we're sitting under the moving averages, and our slow momentum indicators have negative formations. Our slow SMI and our slow stochastic RSI sitting in negative trending spaces, and so we have to take that under advisement as we look at the chart. Now let's go right into a 30-minute and see what we've got here. Alright, so we have this lift. We can see the moving average squeeze. We know that there's resistance here. We know that there's resistance here. We know that there's resistance here because it's the high of the day and it's being sold off. So what do we have as slope on these 30 minutes? you know, these slow momentum indicators on the 30-minute chart are typically going to look like the fast indicators on the 4-hour chart, right? And so this is pointing us up into resistance, this pointing us up into resistance. Notice the trade here early in the day, right? Middle of the night, actually. And so if we take a look at this and we see it with this crossover formation, that in itself tells us, hey, you know what? I've got myself lift. I'm coming off of my measure. I'm going to watch it, break my 20, retest my 20, and at that point I'm going to look for slope and location and decide what I'm going to do. Please, when you can, please do your best to pay attention to the retest of your levels and your trend lines and your momentum indicators, like your moving average, before you step into a trade. Give yourself some added strength. Alright, if we go into a 15-minute chart, wow, I spent a lot of time here, but hopefully what I'm helping you with is technique, right? Which is very necessary for you to carry yourself forward through the day. Alright. That is showing the punch up into resistance. Mixed. So we should have some wicks give us some trouble. Look at how nicely everything's doing exactly what the technicals are telling us. Right? Exactly. Look at the fast lines to give you directional motion, and look at the slow lines to help you with the resolution of those movements. Alright, let's take a look at the next group. What are we looking at for Apple? Apple broke a trend line and then rejected it, sitting now in a really messy space of moving averages with sideways action. Again, not a real pretty place to trade overall. However, really simply, if we make a lower high here, bounce into this region and reject it, there is a likelihood of a reversal. Now look at what's happening. We're sloping up, so we know the chart's going to bounce into where? Resistance. If it bounces into resistance and gives us a higher low, there'll be more upside action. Notice this. It's very steep, very, very shallow. That does normally tell us that we've got motion that's pushing us to the upside, and that is, of course, going to be into resistance. So you want to watch out. Levels there clearly marked in the blog. Taking a look at Netflix, look at this sideways action. Let's measure trough to trough. Take a look at what's happening in the chart. Nothing really in particular. Very mixed, very noisy. Chart action going to give us a little bit of a tough time taking trades here. I would say step aside and let this one just pull itself out of the noise that it's at. If you are saying to yourself, you know what, I believe that this thing's ready to bounce, I see it recapturing the space, you know, you can go for it. But again, what happens when a chart is down here and it is attempting to recover is that it bounces up and it retraces. That's just what it does, folks. And so anticipate that's going to happen. If you take it off the break, you're going to have a good chance of getting a great trade. If all of these momentum indicators have slope, if they don't, it's going to come right into resistance and retest. That's how you know you're going to do that. Tesla, like clockwork, folks. Gave this one to you. We talked about this. We talked about the bounce off of this level. We talked about the rejection of this level. And now, look what it's doing. It's giving us a higher low. Higher low. Is Tesla prepared to move forward? I don't know, but if it loses 188, I'm inclined to believe the chart has more downside action ahead of it, right? At least into the 185 to 184 region. Could it collapse even lower? Perhaps. It's got negative drift. But it also may be trying desperately to recover. Rachel said something about Elon Musk saying something. I don't know. You know, this was a technical bounce. If Elon was talking, then it just, you know, made the bounce even prettier. But all that being said, take a look at where we are. Flat 10, flat 20, flat 50. Charts looking sideways here. Momentum sideways. Drift negative. If we've got this negative drift action, we cannot anticipate that bounces are going to hold until they retest and give us what we need. If you have a chart that you really want to look at, just let me know and we will go through it. Dang it. Qualcomm rejecting that region. All right, sideways action here. Bell's about to ring. Beautiful. There it is. There's the bell. And so we're looking at sideways squeezing action here on the 4-hour in Baidu. Upside momentum out of negative trending territory. Whatever it is that we break into on the upside here, we are going to reject. That's just the way this chart works, particularly with this flat action. Let's see if we've got any juice that pushes this one into the next space, or if it rejects the area. Look at the 30-minute chart, very noisy, negative momentum, but look at the location, right? So watch for this chart to bounce. Look at the fast lines showing momentum. Watch for it to bounce, but then pull back to a higher low. The higher low is going to give you the sustained trade, right? That's what that's going to do. Okay, taking a look at Facebook. Sorry, charts get a little slow when they start feeding all this data. Facebook is looking like it's breaking down, folks. Watch oil move into the pivot. Good sloping action there. Good sloping action. All right. This is a very likely support zone. So notice we've got no slope here in the MACD, but we do have slope here. The fast SMI is very, very low. Look what happens when this chart gets this low. It bounces into resistance. Where's resistance? It's right in front of us. Daily pivot, trend line event, moving averages, the whole shebang. This one looks like it is a dreadful chart to trade today. You want to be really careful here with this one as it moves around. Let it chop through the space, move up into resistance, come back, hold support. Hang on, folks, big sneeze. Excuse me. So let it pop out into this region and retest. See if it can hold it. See all the slope action though? If you say to yourself, hey, is this a good place for me to take a trade? Well, you've got about a 30-cent stop, right? Maybe a 40-cent stop. If you take it here, look at the slope. Slope, 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 slope. It's very negative, the location, so we know it's going to hit resistance. but you've got slope, so it should punch out into the secondary line of resistance for you. So watch for that. I hate it that I say F-U-R instead of F-O-R. I noticed that. I just despise that. Alright, so last one, let's take a look at Yahoo. Watch SanDisk for the bounce. My goodness, this thing should be bouncing. Yahoo should bounce here. It should bounce here. What do we have? Flattening, stabilizing momentum. All three of our technical indicators in the same space. Watch it. Watch it now. We've got a weekly pivot. We've got the 50 simple moving average. We've got trend line support. The second we breach this 10, watch for it to hold. The chart has bounce potential here. I've been calling it for 2 days off of this pullback. This is a pretty potential trade. You've got to give it some time. Let the first 5-10 minutes go by. See if you get yourself some inflection for the bounce action there. If it loses 44.20, it is going to break down. But again, because it's so negative there, it could break down, have its last hurrah, and then turn around. You want to be very, very careful taking long trades when your technical momentum indicators are extremely extended. All right, such as SanDisk here, but this one is, you know, really such a train wreck. So you just want to watch it here as it lifts off of 63.50. Be very careful about opening any shorts when your momentum indicators are that steep. All right, the offhand, you want to watch Twitter. As it's coming up over this level, it's going to make for a pretty trade to the upside. You're going to be in good shape. Watch for these guys bouncing. Again, our primary focus here being oil. We want to make sure that we are really paying attention to what's going on here in this chart as it comes into the resistance region just up ahead. This is a weekly pivot just above us. It should be above us somewhere. Here, yeah. I think this is it right here. So, you know, we'll watch ourselves move into that region, potentially look at the slope. That's how you know you've got action. All right?